From our studios in Atlanta, this is CBT News.
The Kerrigan Advisors Market Update, brought to you by Kerrigan Advisors.
Ryan Kerrigan is Managing Director of Kerrigan Advisors and joins us now here on CBT News for the first time. Ryan, we appreciate you joining us. Thank you for taking the time.
Thank you, Joe.
All right, Ryan, let's start with what is going on in the market right now.
Happy to do it. I think we should start with the Kerrigan Index. And so what we do here at Kerrigan Advisors is we track all the publicly traded auto retailers each and every month. And the 7 primary auto retailers here in the U.S. are Asbury, AutoNation, CarMax, Group 1, Lithia, Penske, and Sonic. And if we take a look at that index, for example, in the month of October, we are down just a little bit over 1.2%. Now, this comes off of an extraordinary September in which that index was up 11.5%. So the index was down just a little bit, lagging the overall market, but that's coming off of a very strong September.
All right, so we're about a month away from 2018. How strong has the buy-sell market been in 2017?
The buy-sell market remains very, very strong. So we have first half data for 2017 thus far. We're at a little over 100 transactions in the first half of the year. And this will mark the 4th year of historic run rate level of activity of over 200 transactions in the industry. And this really foots with what we're seeing here at Kerrigan Advisors. We are having an incredibly busy year. Year to date, we've announced the transactions, we've advised on transactions of 28 franchises and a total of $1.9 billion in revenue. So this market is very, very hot.
Okay, so what are the size of these transactions?
It's a really important point. The transactions are getting bigger and bigger. And so what we're seeing is a trend in which most transactions now are involving multiple franchises. And whereas just last year, the average transaction involved 2.9 franchises, that's up a remarkable 23% this year to 3.6 franchises per transaction. This is a trend we've seen now for multiple years, and it continues.
All right, Ryan, tell us who these buyers are that are buying all of these dealerships.
It is a much more interesting and complex marketplace than it's ever been before, and the buyer pool for auto retail just continues to expand. There are, of course, the well-known names, both publicly traded and private companies that continue to buy dealerships throughout the country, but there are so many more and new types of entrants coming in, and I'll mention just a couple. For example, Open Road, a very large Canadian auto group, just made its first U.S. acquisition. There's a multi-billion-dollar conglomerate in Northern Europe called Pawn that just made an investment in the Indigo Auto Group, positioning them for growth. GPB, the private equity hybrid out of New York, just did a very significant transaction in the Northeast, the Prime Motor Group. And the most recent transaction that we just announced here at Kerrigan Advisors was with Pendragon, a publicly traded UK auto retailer, also making an acquisition in the US. In addition, there are 2 large acquisitions that I can't yet disclose, but we've got 2 groups under contract with large international players not yet operating in the United States. They'll be making large acquisitions here in the U.S. So this marketplace, as I mentioned, continues to be very interesting and very complex.
Ryan, why are dealers deciding to sell right now?
Dealers are experiencing an incredible run-up in profitability. So from 2009 through 2015, there was a historic run unlike any other. Average dealership profitability got up to $1.5 million, and we're just off that a little bit in 2016 and 2017. So we continue to be at very, very strong levels. There's a chance for dealers to go out on top. And this very much echoes what's going on in SAR, where we had this historic rise in SAR over many, many years. We peaked in the 2015-2016 period, and while off just a little bit, things are still awfully good.
All right, Ryan, does real estate play into the decision to sell a dealership?
Real estate's a big component here. We've got interest rates at record low levels, which have pushed real estate up to historic highs as well. So now we're in a situation where dealers are looking at very high levels of profit, very strong blue sky values, and probably a record level of valuation based in their real estate. You put that together and sellers need to think very, very seriously about that.
We recently saw that Kerrigan Advisors was quoted in an automotive news article about dealers, operators, retirement fueling buy-sells. Give us a little bit more information on that.
We do see that factoring in. There are a lot of dealers at or near retirement age that are very happy to continue doing what they're doing. but they're relying on some very trusted lieutenants, folks in many cases that have been with them for a long, long time. And these trusted lieutenants are the ones that are often putting 5 and 6 days a week into the dealership. And so what we're seeing, and there was a recent article, as you mentioned, with a California dealer mentioning that he was very influenced by the fact he did not want to go through the process of finding someone new to operate his store, and that triggered a decision to do a buy-sell. And he is not alone. We've had that conversation before.
Are dealers and their families fully exiting and leaving auto retail, or are you seeing another kind of transaction dynamic?
There are more types of transactions being done these days. Historically, when a dealer chose to sell the business, typically it was an outright sale. But we're seeing a much wider set of transactions getting done these days. We think that's being driven primarily by the need for capital. And that is to say, the transaction sizes are getting larger, real estate is more expensive, OEM requirements are more expensive. And so for dealers who still want to stay in the business, they're often really seeing the need to bring capital in. And this is triggering a scenario in which dealers are going to market, they're seeking to sell equity, but they're not selling 100%. We estimate that so far this year, more than 70 dealerships have struck a situation, a deal, in which they've sold equity, but not sold 100%.
And are there any brands Kerrigan Advisors is hot on right now?
There are a lot of strong brands. I'll point to 5 in particular. Toyota and Honda, no surprise, continue to be very, very strong and sought after franchises. Great business models, very good blue sky, and very much sought after in the buyer community. That said, we're seeing a lot more interest on the part of domestics. The domestic business models, particularly led by Ford and Chevrolet, have performed very, very well. They trade at a discount in terms of blue sky valuations to some of the imports, and so we're seeing a lot of buyer interest in those franchises. And then I have to mention Subaru. Subaru's coming off this remarkable 71-month sales streak of month-over-month sales gains. They are very much the belle of the ball. We get a lot of interest in the buyer community for Subaru.
All right, Ryan, you guys are based out of California. Will Kerrigan Advisors be attending the LA Auto Show this month?
We will indeed. We'll be out at the LA Auto Show, and in fact, for dealers who are coming to town, please let us know. We'd love to host you. We're having a buy-sell briefing talking about all the dynamics in the marketplace, so if you're going to be in town, please let us know.
All right, once again, Ryan Kerrigan of Kerrigan Advisors. Ryan, we appreciate you joining us here on CBT News.
Great. Thank you, Joe.
Thank you for watching the official news source of the retail automotive industry, CBT News.